Hello and welcome back to another episode of Word Wednesday. I'm your host, Paige Goodger, and as always, we have Bix Weir, but this week he is incognito from an undisclosed location. How's it going, Bix?
It's going good. We're going to be talking about regulators, so I thought I'd, hide so there's no government agency walking by trying to black bag me.
Gotta protect ourselves, man. So today on Word Wednesday, we are going to be talking about the CFTC, or the Commodity Futures Trading Commission. So what is the Commodity Futures Trading Commission? The CFTC is an independent U.S. federal agency established by the Commodity Futures Trading Commission Act of 1974. The CFTC regulates the commodity futures and options markets. Its goals include the promotion of competitive and efficient futures markets, which we will go into. A futures market is an exchange where futures contracts are traded by participants who are interested in buying or selling these derivatives. In the US, futures markets are largely regulated by the CFTC, with futures contracts standardized by exchanges. Today, the majority of trading of futures markets occurs electronically, with examples including the CME and ICE. Unlike most stock markets, futures markets can trade 24 hours a day. So to understand this futures markets, we need to understand futures contracts. And these contracts are price risk management tools. It's a derivative agreement that involves the sale of something at a future date. These contracts were intended for producers looking to manage business costs, but are now a fundamental component of the investment industry. Future contracts provide a hedge or a limit against a change in the price of a commodity. So within futures contracts, we have the forward price, which is the predetermined price of the commodity being sold and bought. We have the position of going long, which this is the person who agrees to buy the commodity in question and pays the forward price. And then we have the position of going short. And this is the person who agrees to sell the commodity in question at the forward price. So the agreement to buy is the long position and the agreement to sell is the short position. And when someone enters a futures contract, they are obligated to carry out the transaction for the underlying asset in the future at the delivery date, no matter how profitable or unprofitable it ends up being. So Bix, what would be in a futures contract? Like what type of commodities are in these types of contracts?
Wow, you can do a future contract for anything. It's basically a side bet of a price of a commodity in the future. It could be silver, it could be gold, it could be lumber, it could be oil. They're used hugely in the oil business to control, but mostly the original intent, like you said, was to hedge producer prices and legitimate business prices to more efficiently run your company. But in reality, it turned into a banker's game of manipulation, trading thousands of times the underlying contract, the underlying asset. So yeah, it could be anything. Truthfully, anything. We can bet a futures contract on whether or not you'll get your hair cut in 3 days. That would be a futures contract. So it's exciting, but at the same time, a lot of corruption is available to all players, especially if you have a lot of money and a lot of power.
Yeah. The way I've heard this explained is if I were a corn farmer and Bix was a cereal factory, we would make these futures contracts to ensure that Bix could secure a price of corn and that I could secure selling that corn to Bix at a specific price. So it's to inhibit that market fluctuation of what you would be paying for a specific commodity. So
and that's a legitimate, absolutely a legitimate way of doing business if that's all it was. So yeah.
Yeah, we'll get into that, how it's not necessarily that setup. So futures are the underlying instrument off which the options are priced. And options are financial instruments that are derivatives based on the value of underlying securities. So an option contract offers the buyer the opportunity to buy or sell the underlying asset, depending on the type of contract they hold. Unlike futures, the holder is not required to buy or sell the asset if they choose not to. So you can think of an options contract as the right, but not the obligation to sell a futures contract at a predetermined price on or before a given future date. So to recap that, an options contract gives an investor the right but not the obligation to buy or sell shares at a specific price at any time, as long as the contract is in effect. By contrast, a futures contract requires the buyer to purchase shares and the seller to sell them on a specific future date, unless the holder's position is closed before the expiration date. So, Bix, it seems as though the CFTC is playing an important role in regulating financial markets, and that without such regulation and regulators, market participants could be subjected to fraud by unscrupulous individuals, and in turn, people would lose faith in our capital markets. They also say this could make capital markets ineffective at efficiently allocating financial resources to the most deserving means of production and productive economic activities to the detriment of investors, consumers, and society. So what is your take on that, and what kind of fraud and manipulation is really going on behind the scenes with the CFTC?
Well, the interesting thing about the CFTC being the arbitrator of what is fair and what is unfair, it would be beautiful if that's what they did. The problem is that's what they tell the markets and tell the players and tell the public that's what they're doing. But in actuality, it's the exact opposite. They do it for some people. They don't do it for others. They are very much involved with the manipulation of all markets. So the interesting thing comes down to what kind of market would we have if everybody knew it was fraud, like it is. If everybody knew it was fraud, people wouldn't participate in a fraudulent market. So it would be self-regulating. Everybody would leave that market and join another market that was more fair. Without the regulators, we would have individual participants regulating themselves because they would only participate in a fair market. So the guise of the CFTC being the arbiter of fairness is exactly the opposite. They are ensuring the manipulation of all commodities by the big banks that control 99.8% of all trades are these big bank computers trading back and forth to each other to rig the price.
Yeah, so are those like you said earlier, the people who the CFTC lets slide by, are those predominantly big banks?
Yes, predominantly big banks or big financial institutions. There are some mining companies, the bigger ones that are so entrenched with the entire system that they'll participate also in the rigging of markets. Barrick Gold is a great example. And you can always check the board of directors, see what criminals are on there. I remember Barrick was started, Papa Bush was on the board of directors, and Kissinger. And I mean, it is a big con game, but it is very important for the American system to if we want it to continue to run the way it is, which is calling it a free market but not having it be a free market. It is required to rig the commodity markets because otherwise people would say, oh my God, the system's falling apart. I'm going to go buy gold and silver. You'll see gold and silver prices skyrocket through the roof, and everybody will lose faith in the US dollar. So yeah, it's the big guys.
Yeah. So these regulators, how are they appointed, and how do they assume a position of power?
That's a great question. 100% political. And usually I think there's 5 regulators when it's fully staffed. So they are chosen by political appointment, believe it or not. And the regulators, it's 100% political, it's half Democrat and half Republican. And then they have one, either Republican or Democrat, running the show that basically they decide on which party wants what. And that's the law. That's the rule. Mm-hmm. And the even more embarrassing part is there's only 2 judges in the whole CFTC. If you have a complaint about commodity rigging, you can go to 2 judges. There's one of 2 judges retired in about 2010, and in his retirement letter that he was compelled to file with the court, mm-hmm. he said, hey, I've been doing this for 20 years. There's only 2 judges. His name was George Painter. And there's another judge named Bruce Levine. And he said, on the first day we got in here, Bruce Levine came into George Painter's office, the two judges, and he said, I have promised Wendy Gramm, who was the head of the CFTC, that I would never find any of the banks guilty of rigging the commodity markets. And in 20 years, with all the cases that were brought in front of him, never once did he rule in favor of the person suing the bank. And, and the other judge finally blew the whistle 20 years later. And everybody said on the commodity markets, oh, he's just going senile. Don't listen to him. But you look at the guy's record, and it's 100%. He bogs it down, even if there's just stone cold evidence everywhere. He'll bog it down. Never once did he find the banks guilty in 20 years. It's amazing. It's an amazing story.
I mean, how many times can you not find someone guilty? You know,
apparently
it's like
100%
the percentage of that is it's so low that a specific party wouldn't be guilty at least once.
Yeah, and that's not even the worst. Let me give you the worst.
Okay.
So I've been fighting this fight to get gold and silver freed for over 20 years now, and it's always someone on the CFTC that is a good guy and a bad guy, good cop, bad cop, but they're good guys and bad guys. The bad guys are usually really stupid. These are of the 5 commissioners. The bad guys are like really dumb. And there was a guy named Michael Dunn who was on the CFTC board forever. And he was literally the dumbest human being I've ever seen in my life. But he was easily manipulated by the big banks. So in 2000, we were trying to get position limits put on all the contracts so the banks can't just make all the trades. And he was always the one stopping it, always the one voting against it. In 2012, he left the CFTC to go to the DTCC, which we talked about the other day. That's the place that holds all the contracts.
Yeah.
Now, in 2012, what happened was the summer of 2012, they transferred all the swap contracts, which is another derivative where they rig the markets, from the CFTC to the DTCC in a vault at 55 Water Street. 2 months later, Hurricane Sandy comes into town. Everybody knew Hurricane Sandy was coming. Michael Dunn was put in charge of that vault at 55 Water Street. It held $34 trillion worth of paper contracts. He left the door open during Hurricane Sandy. The whole thing flooded. All these paper contracts that came from the COMEX got transferred over there, and everyone was like, nobody knew what was happening. They heard that $34 trillion in paper contracts had been flooded. So what happens? It takes a full month to pump the water out. And then the day after the water's pumped out, there's an electrical fire. 20 people go to the hospital. Basically, they flooded it, and then they burned all the contracts because they were so corrupt, and they were a paper trail. And they said, oh, don't worry about it. It's all stored electronically. Well, we all know what happens to electronic manipulation of contracts and everything. So yes, they are criminal to the T. Not everybody in there is criminal, but they have one or two, and that's all it takes, one or two to pull the trigger. And it's kind of like the Federal Reserve. All you need is one or two criminal people within the Fed. Fed has thousands of people, and then everybody hates the Fed. Everybody should really hate the CFTC.
Yeah, it sounds like it. Like they're all in cahoots with each other. So how does this fraud and manipulation relate to gold and silver?
They're supposed to stop the manipulation. Now, so what they do, like you said, you explained very well what the futures and options, the legitimate purpose are. It's for hedging business risk, regular business risk. And that's great. But for gold and silver, none of the miners use it at all. None of them are hedging their output at all. Maybe a tiny amount. So why do we even need the futures and options? It's for the brokerage houses and the banks. And if you look at the volumes traded, like every year they mine about 850 million ounces of silver. So it takes a full year, people working around the world, millions of dollars in capital for mining equipment and pay employees and all that. And they only get 850 million ounces out of the ground. Well, every year they trade 300 billion ounces on the electronic markets. It's like, wait a minute. Why is this even allowed? There's no business purpose for it. Just in August alone, there was one day where 2 billion ounces traded in futures and options contracts. If it doesn't mean anything, what is bought and sold to set a price, why do we even have this exchange?
Yeah. So why do you think they are doing that to gold and silver?
Well, the number one reason is because we live in an unbacked fiat monetary system. They control the power of money. The US dollar is it's the first world reserve currency in the history of mankind. And it's going to be the last. No one will ever be able to do this again. But in order to keep it going, they had to create the COMEX exchange back in the early 1970s when the CFTC was brought on, because that's when we went off the gold standard. In order to control the value of the dollar, they had to control the value of gold and silver, because those are the options. You know, we've been on gold and silver standards forever, and the alternative to the dollar was gold and silver. So they said, okay, we can control the value of this fiat money if we control the value of gold and silver. So they implemented not only the COMEX exchange, but the regulator at the same time in order to control the manipulation. And it's a big fraud. It's coming unwound now and unraveling, which is great. But yeah, we would have been better off having no regulator at all. And if a market turns fraudulent, get out. You know, it's kind of like, let businesses run the way they should run, because if they're fraudulent, people won't participate.
Yeah. And if there aren't regulators or people saying, covering up all of this stuff, people would know. That would be information that's available to the general public, and then people can make their own decisions on what type of markets they want to be in.
Exactly. That's what they call a free market.
A free market.
Free markets are the road to freedom. Who wrote that song?
I know him.
Incognito. What are you talking about?
So I found a letter that was filed with the U.S. Commodities Futures Trading Commission in January of 2004, disclosing that the CME Group, the Chicago Mercantile Exchange Incorporated, is offering volume trading discounts to central banks trading all futures markets in the United States, not just financial futures, but also metal futures and agricultural futures. So have you seen this letter? What is your take on this letter? What does this mean that the banks are, getting these like volume trading discounts from central banks? What does that have to do with?
Well, it came out. I remember my friends at GATA, the Gold Anti-Trust Action Committee, came out and said, "Oh my God, we found the smoking gun." I don't think it's that big a smoking gun. If you're giving discounts to the banks, remember the Federal Reserve Bank creates money anyway, so they're not worried about the amount of money charged for each trade. But it's just another sign that the con is on, and that central banks are printing money to control and rig the price of that money. So on the COMEX and the LBMA, which is the UK version of the COMEX, kind of. So yes, absolutely, the central banks are involved in the rigging. The what they call bullion banks, the big banks, are involved in the rigging, and the U.S. Treasury is involved in the rigging.
Wow. Everyone's a rigger.
Everyone's
riggers.
Frickin' rigger. You're frickin' rigger. That should be a song, huh? Frickin' rigger.
Oops, I didn't mean to drop an F-bomb, but it came out.
Hey, keep that in there. Yeah, F-bombs do well on my channel, by the way.
Okay, I'll leave it in. So, Bix, is there anything else you would like to add to the CFTC Wednesday that you think is valuable information for everybody?
Well, I think I would ask everybody out there who cares at all about this stuff to petition the CFTC, fight the CFTC. I've been doing it for 20 years, and everybody said, it's useless, it's useless. You know, they're not going to do it. The banks will always win. We wouldn't have come this far if it wasn't for the people who voiced their opinion about the criminality on the commodity exchanges. So yes, it does work. It might take years, but it does work to voice your opinion to the regulators and tell them they are the ones destroying our country. It is not the riggers, it is the regulators who allow the rigging. So I think it's very important for people to voice their concern, especially your generation. Scream and shout. And, my voice is hoarse from screaming for 20 years. So you guys need to pick up the flag and charge the gates of the CFTC and the CME.
Yeah, absolutely. And if you guys need some templates, head over to roadtoruta.com. You can see all the angry emails that Bix has already drafted up.
Absolutely. And you can do a search on the Road to Ruta website. You can find all that stuff. And I've posted everything I've written in the past 20 years. And then I got the videos also, which it's only been going for like 2 or 3 years is the videos. But the written word is all down there. It's going to be a kind of when all this falls apart, there's going to be people to blame. And all they have to do is go to the Road to Ruta, look at the past documentation, say, okay, apparently JP Morgan has been rigging the silver market for 20 years.
Oh yeah, and all the evidence is there. Bix has laid out all the evidence, has done all the research. So please head over to roadtoruta.com if you're interested in really just getting into all of this stuff and figuring out what's actually going on.
And scream and fight and yell because it's not right.
Yes. So to recap, the Commodity Futures Trading Commission, the CFTC, is an independent U.S. federal agency established by the Community Futures Trading Commission Act of 1974. The CFTC regulates the commodity futures and options markets, and its goals include the promotion of competitive and efficient futures markets. But on the road to Ruta, we know that it is just a rig job, and these people are criminal and need to be brought to justice. A futures market is an exchange where futures contracts are traded by participants who are interested in buying or selling these derivatives. Futures contracts are a price risk management tool, and futures are the underlying instrument off which the options are priced. Options contracts are the right but not the obligation to sell a futures contract at a predetermined price on or before a given future date. And on the road to Ruta, we know the CFTC is fraudulent and manipulative and rigging and just all around. They're the bad guys. And do your part, send some letters, do your research, go to roadtoruta.com, and let's bring these guys down.
We're doing it. And your generation, I mean, I'm sorry we gave this to you guys, but at least you got a running start with all this information that's available now.
Absolutely. Absolutely. Thank you guys so much for tuning in to another episode of Word Wednesday. And thank you so much, Bix, for joining me again from your undisclosed location.
I'm going back to the beach.
Oh. We will see you guys next week. And thank you so much for tuning in again. We'll see you then. Bye, guys.